2010 will go down in history as the strongest year on record for Singapore's economy. Economists expect the preliminary estimate of 14.7% GDP growth last year to be revised higher in February, when December activity is taken into account. In the fourth quarter, manufacturing GDP rose 28% year-on-year versus 14% in the third quarter. Meanwhile, services grew 9%, while construction experienced a minor pullback, with a 1% decline after the completion of major projects. Economists note that going into the first quarter of 2011, the economy is losing momentum.
The manufacturing numbers have been distorted badly by these highly volatile biomedical numbers. If we look beyond that into bigger areas and less volatile areas like electronics, what we've seen, I think, is very clearly a loss of momentum in most of these other sectors. And I think that will probably continue, at least in the short term.
Analysts predict Singapore's economic growth to come in at the middle of the government's forecast range of 4 to 6% for the whole of this year. Inflation, however, is likely to be a top concern this year.
When we look at the inflation numbers in the last few months, right, it's already approaching, it's likely to exceed 4% by the time we get the December numbers. And going forward into 2011 itself, this number, inflation, at least on the headline, right, will remain on the high side, at least in the first half of the year.
Analysts say this will likely mean that the Monetary Authority of Singapore will have to maintain its tight monetary policy going into April. The central bank may even resort to further tightening to damp inflation expectations.